Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is our Friday Insights edition, and today we're going to discuss gold. Recently, if you're following commodity markets, obviously inflation is very much prevalent in the world around us today in every aspect of the economy, both here U.S. as well as global. Global demand and commodities have been right in the forefront of everyone's mindset. Obviously, copper, when you open up if it's speaking of metals and you talk about copper very specific, you open up an economy, copper is used just about in everything. So copper demand has been very solid, if you will, and very hot, and obviously the commodities. Now, gold has sort of taken a round trip last year, all-time high, and sort of bottomed out earlier this year in the spot price, and now it seems to turn a corner. This Tuesday, it closed above the 200-day moving average. That's basically just above 1,700 right now. And obviously this chart's not to scale, so just bear with me. But in spirit and in theory, we look at a technical perspective, and the moving average is what we see from a technical perspective on charts. You could look at it in stocks and a few other things. We also now apply this moving average to just about everything that we're analyzing. And when you have a breakthrough to the upside, you break your 200-day moving average of that respective, let's say in this case, commodity, and you close above it, and then you could stay it. That would be a new base or a new bottom, if you will, in the stock, or in this case, the commodity on a go-forward basis in terms of the pricing action. So that's a very bullish sign. So that means that we could hit, meet and exceed in the months and maybe even years to come, higher highs for gold. Now, why would that be? Well, there's a couple of key theories here. Number one, obviously inflation's all around, but the U.S. policy right now is almost debasing the U.S. currency. So as the U.S. dollar goes down by way of all of our policies, right, we're spending more than we have. We have a lot more fiscal deficits that keep building up, and we're flooding the market with U.S. dollars by way of all the stimulus and government support. So all of that just working together is going to put weight on the U.S. dollar. So the dollar goes down in value. We can see that trend. That trend's already persisting and continuing. So the dollar, as it goes down, you also have an increase inverse relationship here. You can see gold benefit from that just because of that hedge right there, or that inverse relationship. So we have a very positive sign in gold, and gold actually is beating cryptocurrencies in terms of performance. It's beating copper in terms of performance, and it's a good inflation hedge to portfolios. And we also look at it here at Blanke Schein Wealth Management for all of our clients, is we have a balanced portfolio. But another reason is just the inflation hedge. We will see higher inflation. I keep talking about it just about in nauseam every day. But gold demand is there, and it's healthy to see that. So we're going to pay attention to it as a go-forward basis and look at it as it just broke through to the upside on the 200-day moving average. So that's key support on a go-forward basis to sort of give us price action and indication if it's sustainable. But we believe all the macro factors that we just laid out are going to support that base case that gold is bullish, and it just reversed trend this week to be bullish on a go-forward basis. So that's our Friday Insights. It's short and sweet. Thanks for watching, and we'll catch you again next time.